In recent months, Iraq has launched one of the most serious and coordinated crackdowns on money laundering in its modern history, signaling a major shift in how the country confronts financial corruption and economic leakage. This effort is not symbolic or temporary. It represents a strategic transformation led by the Iraqi judiciary, the Central Bank of Iraq, financial intelligence units, and enforcement agencies working in direct coordination. Through detailed investigations and targeted operations, authorities have uncovered complex networks involved in illegal currency trading, falsified import documentation, smuggling-linked financial flows, and abuse of the dollar auction system. These practices had long distorted Iraq's economy, weakened confidence in the dinar, and allowed massive sums of public wealth to exit the country without oversight. The recovery of tens of billions of dinars through legal action is not merely a financial achievement. It is a declaration that systemic abuse is no longer being ignored. What makes this crackdown particularly significant is the structural message behind it. Iraq is no longer relying on temporary measures or symbolic announcements. Instead, it is building institutional enforcement rooted in law, accountability, and transparency. By strengthening cooperation between courts, banks, customs authorities, and anti-money laundering units, the state is closing loopholes that once allowed shadow economies to flourish. This effort also aligns Iraq more closely with international financial standards, promoted by organizations such as the Financial Action Task Force, which emphasize transparency, traceability, and risk prevention. For years, the absence of strict enforcement undermined investor confidence and contributed to currency instability. Now the message is clear. Financial misconduct carries real consequences. Beyond the numbers recovered, the psychological and economic impact is even more important. Markets respond not only to policy but to credibility. As illegal financial channels are dismantled, trust begins to return to formal banking systems, and confidence in regulatory oversight strengthens. This shift plays a critical role in stabilizing the dinar, reducing speculation, and restoring balance between official and parallel markets. The crackdown also signals political resolve, something often missing in past reform attempts. By demonstrating that accountability applies across institutions, Iraq is laying the groundwork for long-term financial discipline. This moment marks the transition from reaction to reform, from tolerance to enforcement, and from uncertainty toward a more structured and credible economic future. As the crackdown intensifies, its impact is being felt far beyond courtrooms and regulatory offices, reaching into the very structure of Iraq's financial ecosystem. Banks, exchange houses, and cross-border trade operations are now operating under heightened scrutiny, with stricter compliance measures reshaping how money moves through the system. Transactions once processed with minimal oversight are now subject to verification, documentation, and traceability, marking a clear shift toward transparency. This transformation is not simply about punishment. It is about rebuilding credibility in institutions that have long suffered from public skepticism. By enforcing standardized financial protocols, Iraqi authorities are signaling to both domestic and international markets that the era of unchecked financial manipulation is drawing to a close. One of the most significant outcomes of this enforcement wave is the gradual stabilization of monetary behavior. Speculative currency practices, particularly those exploiting gaps between official and parallel exchange rates, are facing increasing resistance. As illicit channels shrink, legitimate financial pathways gain strength, helping reduce volatility and restore confidence in the national currency. This shift also strengthens Iraq's position within the global financial system, where compliance and transparency are prerequisites for investment, cooperation, and long-term growth. Financial institutions are now compelled to align with international anti-money laundering frameworks, reinforcing trust between Iraq and global partners. Beyond economics, the crackdown carries symbolic weight. It reflects a broader redefinition of governance, where accountability replaces tolerance and enforcement replaces assumption. Citizens witnessing these changes begin to see a system capable of self-correction, one that prioritizes national interest over private gain. This evolving environment encourages responsible investment, supports long-term planning, and reduces dependency on informal financial networks that once dominated economic life. As regulatory confidence increases, so does public belief in institutional stability. What emerges is not an overnight transformation, but a disciplined progression toward order. Each investigation, each recovered asset, and each enforced regulation contributes to a larger framework of trust. The process is deliberate, measured, and rooted in sustainability rather than spectacle. In this recalibration, Iraq is not merely reacting to past failures. It is actively shaping a financial identity, grounded in oversight, resilience, and strategic control. The momentum created by these reforms suggests that the foundations of a more transparent and accountable economic system are steadily taking form. As institutional systems stabilize and regulatory oversight becomes more consistent, the deeper impact of these reforms begins to emerge across Iraq's broader economic landscape. The shift is no longer confined to financial institutions alone. It extends into trade behavior, public confidence, and the operational discipline of both private and state-linked enterprises. With clearer rules and enforced accountability, businesses are adapting to a financial environment where transparency is no longer optional but expected. This transformation encourages compliance not through fear, but through predictability, an essential foundation for any functioning economy. As trust gradually returns, financial decision-making becomes more measured, reducing speculative behavior that once distorted market signals. A critical element of this transition is the normalization of data-driven governance. Decision-makers now rely less on informal channels and more on verifiable financial intelligence, allowing policy to respond to evidence rather than assumption. This shift strengthens institutional memory and continuity, ensuring that economic management does not fluctuate with political cycles or external pressures. Over time, this approach fosters resilience, enabling the system to absorb shocks without resorting to instability or emergency intervention. Stability in this sense is no longer reactive. It is engineered through structure, oversight, and informed planning. Public perception also evolves as consistency replaces uncertainty. When citizens observe that financial systems operate with order and fairness, confidence gradually replaces skepticism. This psychological dimension is critical. Economic recovery is not measured solely by indicators, but by belief in the system's integrity. A population that trusts its institutions is more likely to participate formally in the economy, strengthening revenue channels and reducing reliance on informal networks that weaken state authority. In this way, regulatory discipline becomes a catalyst for civic confidence as much as economic balance. What emerges is a framework of governance rooted in continuity rather than correction. The focus shifts from crisis response to long-term stewardship, where reforms are sustained rather than announced. Each stabilized process reinforces the next, forming a self-supporting structure of accountability. This evolution reflects a broader national recalibration, one where economic order is no longer an aspiration but a practiced reality. Through steady enforcement, transparent systems, and institutional coherence, Iraq moves closer to a financial environment defined not by volatility, but by durability, trust, and strategic direction. As this transformation continues to take shape, The long-term implications for Iraq extend far beyond immediate financial stability. What is unfolding is a recalibration of national governance, one that prioritizes discipline, transparency, and institutional continuity over short-term fixes. The alignment of regulatory systems, enforcement mechanisms, and economic planning reflects a deliberate shift toward sustainability rather than reaction. In this environment, progress is measured not by sudden surges or symbolic gestures, but by the quiet consistency of systems that function as intended. This maturity in governance allows confidence to grow organically, both domestically and among international partners observing Iraq's trajectory with renewed attention. The significance of this evolution lies in its durability. By embedding accountability into daily operations, the state reduces its vulnerability to external shocks and internal disruptions. Financial order becomes self-reinforcing, supported by clear procedures, reliable data, and professional oversight. Institutions no longer operate in isolation. Instead, they function as interconnected components of a broader economic framework designed to adapt, monitor, and correct itself when necessary. This interconnectedness strengthens resilience and reduces dependency on emergency interventions that once defined periods of instability. Equally important is the message this transformation sends to future generations. It signals that economic stewardship is not an abstract concept but a practical responsibility, grounded in systems that reward transparency and discipline. As confidence deepens, long-term planning becomes viable, investment horizons expand, and strategic development replaces short-term survival. The emphasis shifts from managing crises to sustaining progress, from reacting to shaping outcomes. In this context, reform is no longer an event, it becomes a continuous process. Embedded in institutional culture, ultimately the progress unfolding represents more than financial adjustment. It reflects a broader evolution in governance philosophy. Stability is no longer enforced through control alone, but earned through trust, consistency, and accountability. As these principles take root, Iraq moves toward a future defined not by volatility or uncertainty, but by measured growth and institutional strength. The foundation now being laid carries the potential to support lasting economic confidence, positioning the nation for a more predictable, resilient, and self-directed path forward.